Now we see this in our derivative markets too. Futures volume is again back down to our 2020 levels, right? We've essentially flushed out all of the speculation, all of the momentum of the 2021 cycle. It is more or less gone, and we are back down to 2020 levels. Options are a little bit different, actually. Options have seen a net increase over the course of 2023. It's actually trading very similar to how it has through most of well, essentially as far back as our data goes. So the option space is starting to mature. Now, it's important to remember that the overall volume, in terms of open interest, options and futures are very similar in scale now. In terms of volume, note on the side here on the axis, we're talking about $600 million, whereas over here in futures volume, we're talking about $60 billion. So we are talking about orders of magnitude difference. There's a lot more trade volume in futures still, even though we are at the lows. Options are much smaller in terms of their trade volume. But what this really speaks to is that institutions and traders and investors are preferring to use the options market to get that exposure to this asset class without perhaps allocating all of their capital. The asymmetry of an option is it's essentially a 100 to 1 bet, but it's a defined amount of risk. You're essentially putting on the line only the premium for those options to get that directional exposure without having to actually acquire in spot markets or take the leverage on in futures markets. It's essentially another way to get exposure, and it may be that this is actually what's picking up. It's that more capital efficient exposure whilst capital has to move elsewhere, such as out into risk-free rates or any other kind of instrument. So it is an interesting development, and it really is speaking to a gradual maturity of the options market over time.